Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Hi, everyone. I'm Paul Yeager. This is the MTOM podcast, a production of the Market to Market TV show, which is based at Iowa PBS, meaning we are at the center of corn and soybean country. We're going to be talking a lot about the soybean today. Yes, harvest is pretty much done, but that doesn't mean the demand, the crush, the future of the bean is finished. In fact, it might just be beginning. We're going to find out today what is the future and the outlook for biodiesel and specifically renewable fuels as we talk with a legacy oil company that has now acquired a renewable group. So Chevron Renewable Energy Group, they are together now, and Paul Nees is the VP of Global Supply Trading. Global Supply Trading has a very big, wide-sounding topic, and it is. So Paul's going to fill us in about where some of the future demand might come from, where the production, and what the outlook is for the industry in this installment of the podcast. By the way, this is a look at the 2025 calendar. I say that to you because some cool things are going to be coming your way in 2025, so stay tuned. If you want to know what is coming when, subscribe to the Market Insider newsletter, which can be found on our website of markettomarket.org. Sign up so you know the insider information about this podcast. We always preview it the day before, and you'll know before anybody else. And then you can just know, I want to make sure I listen to that. Thank you for subscribing. Now let's talk to Paul Nees. Paul, it's quite a year to be a Cyclone. Can you contain your excitement? Do you look around and go, no, seriously, when's the other shoe going to drop? That's what the Cyclone fans tell me.
Yes, being an Iowa State graduate and living here in Ames, it's awesome to have a great football team to cheer for. And Cyclone fans are always a little bit nervous about what's next, but of course just want to enjoy the ride while we're at it too.
Well, the game against Central Florida was quite a ride. That was that was one thing.
Yes, it was. Yeah, it was pretty exciting to see him come back despite some of the challenges during the game. It was a fun ending.
Being in Ames means you're in the center of Iowa, in the center of a whole lot of research and a lot of agriculture. And Chevron has been located there for a little while. When did Chevron first put stakes down in Ames?
Yeah, we actually started the business in a small town called Ralston, Iowa, kind of over near Carroll. And it's been about 18 years ago, we moved the company to Ames, kind of outgrew our space there in Ralston and felt the need to move to Ames here. And so we've been situated here ever since. And so it's been a really good area. Of course, we have a lot of good partners in the area, including the university to do research with. And it's been a great community to build the business.
And I think I asked one of your old bosses last year about the connection between Chevron, a traditionally oil-based company, with renewables and how the two came together. How do you see that partnership and how it developed?
Yeah, it's been really great. You didn't know what to expect at first when the announcement came out, and Chevron's been a really great owner of this company, and over the last 2+ years, we've been able to make sure we're aligned on goals and strategy and really grow the business in a way that we probably couldn't have if we were still on our own. And so having access to a larger set of resources, a stronger balance sheet, allowed us to do things that we weren't able to grow quick enough as a standalone company. So a lot of great people within Chevron and a lot of smart people, and we've been really fortunate to have good partners to help grow the renewables business with.
Paul, I'm going to make a tiny bit of a jump here that you and I are fairly close in age, but when I remember going to college, renewable fuels was not quite something that was widespread. So how did you get from a guy at Iowa State to where you're at today?
Yeah, I grew up on a family farm over near Carroll and spent a few years in the kind of soy crush merchandising business and a little bit of risk management, and really always had a desire to find a career in value-added agriculture. And this opportunity came up to join a biodiesel company. And to be honest with you, I really didn't know much about what it was, but I really liked the concept of trying to find new and innovative ways to add value to the products that farmers produce every day. And so I've actually joined the company 20 years ago. I was kind of there when the company started and had a really fun career along the way. So I have had many different roles within the company. In charge of things like logistics and trading, buying feedstocks, risk management, supply chain optimization. So I had a lot of fun as the company has grown from the small start that we had to eventually becoming a publicly traded company, later on being acquired by Chevron, and now continue to grow in the last couple of years since then too, as part of the larger Chevron organization. So it's always been fun and challenging to see the industry grow, see our business grow, and just attack the new challenges that we have every year.
What do you think has led to the growth the most?
Well, we're an industry that I think provides a lot of things that the public needs around energy independence, cleaner, lower carbon fuels, and really providing additional value to farmers. And so we've seen a lot of policy that has helped us grow both on a state level and on a federal level that has led to the growth that we've seen. And so, there's been some ups and downs. It hasn't been a straight up type of trend, but over time we've kind of weathered through some different storms, and we're stronger than we've been before. Doesn't mean there's not more challenges in front of us, but there's certainly a place in this market for renewable fuels, and we're a leader in that spot. So we really like where we're at.
Policy and incentives have helped. There's always that pushback of, okay, at what point are you going to be able to run on your own? You're probably the closest you've ever been to being an industry that's self-sufficient.
Yeah, that's right. You need policy to get new things started, and certainly that's been the case. That policy has helped the industry grow in a way that wouldn't have without supportive policy. But yes, we've come a long ways, and yes, there's still policy in place that supports it. There's a lot of people interested in the benefits of biodiesel and renewable diesel, and the policy can look different and can come in forms of tax incentives, usage requirements, but all of it's been supportive to grow our industry, and is still pretty critical for our future growth as well.
Well, and one of the big news has always been here in the last couple of years has been this, hey, you know what? We think the sustainable aviation fuel and biodiesel, and we think this can lead. When you see a headline like that, what goes through your mind?
Yeah, it's exciting that it's gone from being this kind of small niche fuel part of the industry that was really disregarded by many folks, and really become more got a lot more attention, as well it should. We've done a lot to add value for the crops that farmers grow, for the animal byproducts that we use that go into biodiesel and renewable diesel. So it's become an important part of the total overall demand for agricultural products, as well as making a significant impact on lowering the carbon of fuels that we consume here in the United States. The state of California is up to, I think, 75% of its fuel would be diesel fuel is now all renewable content. So we're making meaningful progress in a lot of different areas because of the support that we've had.
And that doesn't happen overnight. That takes years to get the, I guess, let's use we'll use the plane metaphors. It's a long way to take off before the thing gets airborne. And do you find encouragement of, is there an acceptability? Is it the industries have to buy in? Who has to lead the acceptability side to make financial sense for a company to dive into? Hypothetically, not necessarily specific to Chevron.
Yeah, I think we've had really good support. Again, it starts with policy. We've had great champions here in the U.S. Senator Grassley is certainly the leader, but many other state legislators from the state of Iowa and other Midwest states have really helped us with getting policy that's supportive to our markets. And really, we see also good demand pull. We see customers that really see a need to lower the carbon intensity of their operations. and there's limited ways to do that. Battery electric vehicles are great, but they're going to have a hard time making headways into some of the heavy duty sectors that we serve. Over the road trucking, mining, aviation, marine, those sectors are going to have a hard time coming with battery electric solutions that are really going to serve those industries well. So we provide a solution that can help them decarbonize their fuel fleets, and it's available now. It's not some technology that's 10 years away. It's available today, and so we see a really good demand pull from these companies that are wanting to do something about lowering their carbon footprints, and they're really reaching out and looking for those types of solutions that we offer.
Who was the biggest breakthrough in understanding the potential of the soybean in this discussion?
That's a good question. I think there's been a lot of people of foresight. To be honest, we built our first biodiesel plant in Ralston, Iowa. It was a 12 million gallon a year plant when the total size of the entire industry in the United States was less than 12 million gallons. And so certainly we've come a long ways since then, but it took some people that wanted to, put some money on the line and make some investments, even though the sure thing wasn't there. And so that was early on. There's been multiple people along the way that have really stepped out and been leaders in this industry, both in the commercial and business side as well on the policy and government side. So I mentioned Charles Grassley as the senator from Iowa as one that I'd probably point to as one of the best leaders from the political standpoint, has done a lot to really help provide supportive policy and grow this industry in the state of Iowa.
Yeah, I think there's a name for him, sometimes a nickname, Father Ethanol or Father Renewable Fuel. There's some term like that, right? You've heard that? You're smiling like you've maybe heard that.
I call him one of the grandfathers of biofuels for sure. He's certainly been a champion for us. And like I said, there's many others as well, but he's one that's been doing it for a long time and has always been one of our champions.
Near you in Ames was a facility that was not yours, but it was on feedstocks. And that was also seen as an opportunity for generating fuel. Where are you at in feedstock discussion now? Or is it pretty much strictly biodiesel is where you're hanging your hat?
Yeah, so we've grown the business, and which means we need more and more feedstocks. And so the feedstocks we use is a wide range of different types. We buy soybean oil, canola oil, all different types of animal fats from swine and beef and poultry operations. We buy a lot of used cooking oil from restaurants, and we buy a lot of corn oil, which is a byproduct from the ethanol process. So recently we have made a investment to form a joint venture with Bunge, and so we have some vertical integration into 2 soybean crush plants to provide soybean oil to our network. But beyond that, we primarily source our feedstock from the rest of the market providers that are out there. And so we require much more feedstock than we can produce ourselves. We rely on good partners in the industry to produce those feedstocks, and we source from all different places across the country and across the world.
Demand is good for the soybean farmer and the corn farmer, and they need it right now. Do you feel that you're in a good position to assist in helping create demand?
Absolutely. If you look at the soybean oil supply and demand data, really we've seen a decline in exports. We've seen really kind of slow, flat demand for the food industry. And so the biofuels demand has been the incremental demand that's been able to soak up this additional supply of soybean oil that's been available. And so if the industry wasn't pulling as much soybean oil in as we were, we'd have large stocks of soybean oil, which would definitely put some downside pressure on soybean prices. So we know farm prices are low. We also see low fuel prices. So we overall just see lower margin environments in our industry, which unfortunately we're seeing for farm prices as well. But we certainly are helping provide incremental demand for soybean oil, which in turn provides additional demand and higher prices for soybean farmers.
Helps the soybean farmer, but it doesn't necessarily help your bottom line when your product, when one of your inputs is higher. I mean, that's just the way business works.
That's right. Yeah. And we buy from all different types of feedstocks. We buy canola oil from canola farmers and processors. We buy animal fats and tallows as well. So we're able to diversify our feedstock mix, and buying the tallow from the cattle processing facilities that help provide higher values for beef farmers as well. So there's other ways that we provide upstream values to those producers.
And when you see these facilities come online that are new crushing facilities, where are you at in conversations with those who are building those facilities? I mean, I always hear about, market research of, well, who's going to be interested if we build a whatever billion-gallon plant or million-gallon plant? Where do you fit in that discussion?
Yeah, we're excited to see this. Again, I talked earlier, one of the reasons for getting in this business is for supporting value-added agriculture, and I'd love to see more investments here where we're able to process soybeans here and instead of exporting that whole soybean somewhere else and create additional value here at home in the U.S. So it's been a great story because we've seen this demand signal from the renewable fuels industry that we need more soybean oil to support growth in renewable fuels. And so we've seen many investments going in from producers here that are adding soybean crush plants. And so we want to buy from all of them. We have more demand than we can satisfy from just one or two origins. And so we want to have lots of different suppliers here because we think the demand growth overall is going to be helpful. Now, we do see the renewable volume obligation has been set for 2025. It's open for 2026 and forward. And so it's really important for us that we see supportive policy as we set 2026, 2027 renewable volume obligation targets will help set the demand for biodiesel and renewable diesel, which in turn will set market demand for the feedstocks we buy, including soybean oil. And so as we think about upcoming policy that's going to be negotiated in the next coming year, we see it as a very important policy item for us to keep our eyes on.
Well, when you see RVOs go, we're raising it, we're lowering it, it's not as high as we wanted, it's not as low. I mean, where are you at in that discussion? How do you fit into that? Is that another phone call to the grandfather on Capitol Hill?
Yeah, we've been active in those discussions. What we saw previously is the EPA set a 3-year renewable volume obligation that covers 2023 through 2025. And, we tried to provide information in support of a higher volume target for biodiesel and renewable diesel in particular. And I think the EPA underestimated our ability to produce renewable fuels. And so we are currently in a lower margin cycle in this business because we simply have more capacity and more feedstock available than the EPA had planned on. And so we see overproduction of fuel and therefore RINs, and that's putting some downside pressure on margins. And so again, that's why it's important for us to get the next volume obligation correct. And so we're providing input into the EPA ourselves directly through our trade organizations and trying to show supportive information for growing the RVOs because it's important, and we think that capacity has to deliver. The industry has the capacity to deliver much more than what we have here in previous years.
I want to make sure I decode that right because I'm hung up on something you said at the very beginning and may have missed some of this answer in the backside. Are you saying the EPA is looking at your industry, not necessarily Chevron, but saying, oh, we just don't think you can produce as much, therefore the number is lower? Did I hear that right?
Yeah, correct. Every time the EPA sets the renewable volume obligation, they have to do an assessment of what they think the industry can deliver. And they don't want to set the target too high, and that could cause problems as well. But we believe they set the target too low. And so what we're trying to do is provide facts and data information around the ability for this industry to produce renewable fuels, the availability of feedstocks to feed these refineries, and the demand for this fuel in the industry. There's showing that there is people that want this fuel. And so that's really been our approach. The EPA in the past has pushed back on larger volume growth, mostly based on their concerns about the availability of renewable feedstocks. And so going back to the conversation about new soybean crush plants, we think that's a really important factor. We think that there's plenty of feedstock available to grow these RVOs, and we're trying to help provide them good information to make a case for higher growth in the RVO for 2026 and future years.
Because I I also think I'm hearing you say, help me out if I'm wrong, the EPA wants to make sure that this is more of an American-grown, a homegrown product, because if you set the volume requirement or obligation so high, and you need to fill this gap that can't be raised by the American farmer, you may have to go somewhere else to fill that volume, or to fill that hole, to fill that volume. Again, do I have that somewhat right?
Yeah, partially. I think that they're looking at all the feedstock available. There's no policy that says we can't use imported
Right.
feedstocks to make biofuels. And so I think they're trying to find that fine line. And really what they're focused on is, in the past, they've used this food versus fuel debate. And if they set the renewable volume target too high, they're worried about food inflation. And so that's probably their biggest concern, especially when we think about the inflationary environment we've been in for quite some time. There's quite a target on their back around not wanting to raise food prices more than they would. So that would be an unintended consequence if they set the RVOs too high. And so, again, trying to show the total volume of feedstock available, both in the U.S. and that's available internationally, that can come into the U.S. and that is going to provide lower carbon intensity fuels is something we're trying to show.
Where is the, I don't know if you're holding hands necessarily, but where is that partnership with biodiesel and corn-based ethanol in having conversations like this with EPA?
Yeah, absolutely. We have great partners in the ethanol industry. Again, we buy a lot of corn oil from that industry. We are united on a lot of policy issues as well. And so we see a lot of great opportunities for partnership, and growing the renewable volume obligations is something that we are both completely aligned on. And so we see great support in the way we go about it, doing that. Now, we're not going to be aligned on every single issue, but for the most part, we have common interest around converting agricultural products into renewable fuels, and the same outcomes of creating lower carbon intensity fuels, domestic homegrown fuels, and providing additional value back to farmers. We're completely united in that front.
So more friend than foe?
Absolutely, yes.
More partner than friend?
Yes, absolutely. I sit on some different organizations, trade groups that are made up of both biodiesel, renewable diesel, and corn ethanol producers, and we have a lot of common interests that we work together on.
Is the biggest growth in biodiesel and ethanol going to come in the United States, or is it going to come from another country, or not necessarily one other country, but other countries?
We're seeing a lot of growth here. What we've seen here in the last few years, which is new to the industry, is larger oil companies getting into the biofuels business. And so we talked earlier how Chevron had acquired Renewable Energy Group a little over 2 years ago. That Chevron decided that they were falling behind in the ability to produce renewable fuels and need to step in a bigger way. And so acquiring Chevron acquiring REG was the right step to take. But we've seen that for many others as well. We see many of the oil companies now in the biodiesel, renewable diesel business, and which makes for different policy type of conversations, but also allows for significant growth in volume of production capacity that's available in the industry now. As we've seen some oil refineries that have been converted to renewable fuels refineries, and that just adds a lot of capacity to the market. We see Europe as a leader as well. Europe's always been a leader in biodiesel and renewable diesel, and so that's where we see most of the growth happening. There are some things happening in South America and Southeast Asia as well. So it really is a global market, and all for different reasons. But certainly the growth in the U.S. has been something that has been significant because of this participation from the oil industry.
Is it going to be better to be strong domestically, or is it going to be better to have, I'm not saying all the business or all the growth go global, but just the way geopolitics work of they're our friend this year, they might not be our friend next year?
Mm-hmm. Yeah, we have really good international trade partners, both on feedstock and on fuels, but the vast majority of our business is focused on both buying and selling in the United States. And we'd expect that to continue. logistics is a big part of it. It's lower cost to keep stuff here. But that's where we're mostly focused on getting on our U.S. policy in a way that's supportive for keeping our product here and allowing us to continue to grow here in the United States. And so we see great opportunities to do that. We're far from meeting any type of caps or limits, and so we think there's a lot of runway here left in the U.S. for growth.
See, nice job tying it back into planes and aviation fuel. I like that.
There you go.
Do you see, Paul, that the story that you've told about the benefits of biodiesel here, the farmer knows if I have another place to sell my product, that's going to help me. You mentioned the carbon aspect of it. That's going to be maybe a little more governmental. That seems to be the way government likes to, they like that. What's the selling point to the general public then that makes up the majority outside of your industry that needs to know what your story is and what's positive about it?
Well, I think there's general awareness across the country around the need for needing to lower the carbon intensity of our fuels. And so, we need more and more energy every day. We also need lower carbon energy every day. And so we think we have a great product that helps allow us to do that. And so, we're fueling trucks and railroads and boats that are really kind of that workhorse that helps run this country. And so, being able to produce a domestically produced fuel that's lower carbon, produced from agricultural inputs, it's a pretty good story. And so we see great, great acceptance of that, and we see a lot of people, want to reach out more and figure out how they can participate and use these types of fuels. It doesn't require any type of special engine modification, and so it's easy for them to convert their fleets into these types of renewable fuels without having to do major investments on their end.
The homegrown side of things, the not open to global wars, seems to always be a selling point when people talk about gas prices. And I know that gas has a different word in your world. That means something different, but you get what I'm saying, right?
Absolutely, yeah. People have their eyes on the fuel pump every day, whether it's gas or diesel, and we think that having the secure supply here in the U.S. is pretty darn important as well. So we're happy to contribute towards that.
We've talked about feedstocks, we've talked about biodiesel, renewable diesel, but I guess we haven't looked at your official title of global supply trading. What's the market look like right now for trading? What does that mean in your world?
Yeah, so I have teams that are responsible for logistics, acquiring the feedstocks that we put into our refineries, doing trading, and doing hedging and risk management activities. But as I said earlier, we're a global business. We source feedstock from places all around the globe: South America, Southeast Asia, Australia, New Zealand, Europe as well. And so it's really important for us to have supply chains and visibility to all the different markets, and so we can optimize based on the product that's most available. And we see different cycles in commodity prices here in the U.S. and internationally, and we want to have access to the feedstocks that provide us the most value. And so as we try to grow our business, we want to have a larger supply of volume available for us to do that. I don't think I mentioned this earlier, but we have a big expansion happening in our business right now. We have a renewable diesel plant that's in operation today in Geismar, Louisiana, which is right around New Orleans. Currently producing about 90 million gallons per year. By the end of this calendar year, we'll complete the expansion. We'll be running 340 million gallons a year when that project is completed. And so it just points to, again, our need to grow total feedstock supply to be able to feed our growing demand within our network, but overall the industry is growing as well. And so we're just looking to supply low carbon intensity feedstocks to keep growing the industry.
Are we going to see more retrofits of oil refineries and not new ones built?
Yeah, I think that's a pretty big shift that we've seen here in the past couple of years. Is some of these smaller oil refineries that maybe weren't as profitable for various reasons made more sense to switch into renewables. And some of those projects have been quite successful. I would expect that we're going to see more discussion of that happening as we see more demand for renewables grows. every refinery has their own set of supply and demand fundamentals that are going to drive that decision making. But certainly that's been a model that has worked, and would expect more people looking at doing that as well.
I've had this discussion multiple times over years here about nobody wants to. There's always the biggest NIMBY. They think it's a packing plant. It's probably a refinery. Nobody wants to put a new one of those in their backyard. By your smile, I think you're in agreement there with me.
Yeah, it's certainly a petroleum refinery, but I tell you, we have biodiesel plants, renewable diesel plants, and you're not talking about near the same type of environmental impact or noise and smell that you'd maybe see at other types of locations. So we're pretty good neighbors as far as that goes. And so, we've seen, early on when the biodiesel industry was growing, we had lots of farmer investor groups or just community investors that wanted to put a refinery in their community somewhere. And so, they're reaching out to say, hey, we see the future of biodiesel. We think this is a great potential market opportunity. How do we get in this? And so we had the knowledge and expertise to understand the technology, know how to build a refinery that would produce quality product, and then the business know-how to run this thing as far as buying and selling and doing all the things to run these refineries. And so we were able to build biodiesel plants for other investor groups early on when they were wanting to grow these things out. And so I think people really appreciate the rural economic impact that these refineries have had in Iowa and across the country, because they've been pretty significant in areas that haven't had a lot of other new job opportunities. They've been some pretty significant sources of investment and job opportunities for people.
Do you see the growth in your industry to continue to be much more of a measured stair step, or do you see one of these big leaps that's really going to stretch the capacity? I'm getting the sense from the government they want to keep it on a stair step approach.
Yeah, I think it's been more measured growth. We're starting to mature a little bit. Like I said earlier, I've been in this industry for 20 years, and there's been a lot of ups and downs, and sometimes some sharp ups and downs. And so, really, as we talk about the renewable volume obligation and policy, and we see companies having that demand pull for our product, we're really talking about pace of growth. We're not talking about is this industry going to be here or not, or is it going to grow by 50%? It's just the pace of growth that we're really talking about. And we still think there's a lot of runway, as I said earlier, but we're becoming a much more mature industry that has more stable returns and more stable growth.
Lastly, the ceiling on this. How high is that ceiling?
At the end of the day, I think it's quite high. I think biodiesel and renewable diesel can displace a lot of petroleum fuel in the supply chain today. So if you look at the size of the diesel market in the U.S., is something over 60 billion gallons. It's a huge market. Really, the limits to growth are going to be the availability of feedstock, vegetable oils, animal fats, tallows. There's only so much of that we grow every year, and that'll continue to grow on an annual basis. We're looking at things, novel technologies that might provide new types of feedstocks that we haven't used in the past. We are partnering with folks in the industry on growing out cover crops and winter oilseed crops, so we can see opportunities for farmers to grow more crops on the existing land that they have. And so we think there's other ways that we can grow the overall supply of feedstocks, because we really see that as the ability for our ability to grow feedstocks will be the way that we can grow the size of this industry. And so we're finding ways to different ways to invest in the feedstock growth to help support that.
Paul Nees, thank you so very much. Appreciate your time.
Thanks a lot, Paul. Great talking with you.
New episodes every Monday from Market to Market and the MTOM podcast. A reminder to subscribe to the Market Insider newsletter, because in this space, there might be something fun coming your way in 2025. Stay tuned, subscribe for that newsletter, and be in the know. We'll see you next time. Bye-bye.